When I first started trading, I didn't trade anything sub 5 mil.
Can you tell people why?
Low floaters can make.
Hmm.
Ideally, again, there's always kind of an A setup or a B setup. A plus for me is like first half hour. My cutoff typically for this setup market time is 11 a.m. Like if this setup hasn't formed and done its thing by 11 a.m., it's off the table.
How much do I need to even start trading this strategy?
When it comes to small caps, I think this is a relatively lower risk strategy. I think that's why it's another reason it's great for new traders, because most new traders aren't full-time and they shouldn't be.
What have you found has been the biggest mistake that new traders make when trying this strategy out?
I think for most new traders,
welcome back to the show, everyone. Today is going to be a great day because we're doing what you love to see, and that's sharing screens, sharing charts, sharing strategies. Today I brought Craig, aka the Tatted Trader. He's been on the show before. He's been trading over 10 years. So you're going to want to pay attention, take some notes. Craig, welcome back to the show, brother.
Thanks, man. I appreciate it. I'm looking forward to this. You know, talking about myself and my trading journey is always a little like, because I can barely remember yesterday, let alone like 10 years ago. But you want to talk strat, like, I'm good.
Let's go. So I know we talked briefly off camera, and this is a strategy that you really like to show beginner traders as well. So can you give us a little premise of why you like this strategy for beginners?
Yeah, so a couple main reasons. One, like first and foremost, risk is everything, right? Like we know that. Everybody talks about it. But with small caps, it can be tough to really manage your risk effectively because of some of the moves you get in such a short period of time. The reason I like this particular setup or strategy is because it's harder to say lower risk in small caps, but it is. I mean, compared to some of people out there trying to catch mean reversions or short these parabolic candles, that can be scary for anybody, especially new traders. I mean, you can be down 20, 30, 40% plus in a heartbeat. This
Look
strategy,
at HOLO.
yes, which did hollow me out too.
Okay.
But this strat is just a little more it's less volatile, right? It's a little slower, a little less volatile. It's usually not the hot chick of the day. So that's one main reason. And the other that I like to put new traders on this is just it's easy to recognize. Just from looking at the chart on the screen, it's easy to see. So when you're trying to learn pattern recognition, this is something that is a nice first step, in my opinion.
So what are some fundamentals they need to know before we go dive into the charts? Like it's easy to see. So that's one of the reasons why you really like it. What are some basic fundamentals to be thinking about before we go dive deeper?
So I guess a couple key, I mean, if you want to get into depth on fundamentals, right? Like things like market cap, things like that. This is a big debate, right? Institutional ownership, IO percent, right? On this particular setup, I'm looking for under 50%. Under 40% is even better as far as from my back test, things of that nature. Market caps, 200 mil or less is ideal. Not saying I won't trade above that, but again, in an ideal scenario, under 200. And then as far as just a gap percent, ideally, most of my scans don't even pick up gaps below 15%. That's just me. But for this setup, ideally, again, more of an A plus style is 30% minimum. More so the high, like if you're lucky on this setup and you catch 80 to 100%, that's like A plus 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 plus. It just doesn't happen very often.
Okay. And you're saying 30% when it opens or 30% the high pre-market?
When it opens.
Okay.
So yeah, part of the setup there is you do need a pullback from the pre-market high to the open, which, when I start sharing charts, I'll talk more about that. That is a big one. But as far as just the actual open, right at 9:30 market time, 30% minimum is more ideal.
Okay. And speaking of that, how you said you're going to go over that in the charts a little bit later of pre-market highs a little with the fade. Are there some other key things you need to be thinking about? Just I want the listener to really understand like the premise before they dive into the chart. You know what I'm saying? So is there anything else, like you said, you want to see a fade from the pre-market highs? Anything else you want to see?
You do want to see the fade from pre-market high. Trying to think even before open. I don't like tickers on SSR, but I can say that for every ticker I've ever traded ever. And then even after open, right? So one key thing after open for me on this setup is I want this to happen in the first hour of the day, right? Ideally, again, there's always kind of an A setup or a B setup or whatever. A plus for me is like first half hour. If this happens in the first half hour, that is preferred. My cutoff typically for this setup market time is 11 a.m. Like if this setup hasn't formed and done its thing by 11 a.m., it's off the table. I'm not
Mm.
even looking for it the rest of the day. So that's, I guess, a couple key things after open.
And this is a short setup or a long? What is this?
Sorry, it is a short setup. I should say that too. I'm so just, I short everything. I don't even have a long strat. It was small caps. I wish I did because there's infinite potential on the long side, but I don't have one that I'm comfortable with small caps. And of course, this whole setup, right, is with small caps, typically $10 or less on the ticker. You
Mm.
know, for my back test on this setup, everything is $10, and that just kind of correlates with the market cap too. You start trading higher price tickers, your market cap starts getting a little higher, and things get a little wonky when it comes to back tests and things like that. So kind of keep the price in line so I can keep the market cap at a favorable level, all based on the back testing.
Now, is that the price of the stock as in the previous day, like the market cap it was, and now, like, say it's at $5 yesterday, but it gaps up to 20. You know what I'm saying? Like the next day.
Yes. Yeah, because I'm always looking at the fundamental data from like Flash Sec or things like
Okay.
that. And they're great, right? But they can't update. From my understanding, their API doesn't update on the day of the gap. It's going off the prior day. So yeah, good point. Absolutely. And again, and I'll get into this when we pull up charts, but that's something too that people could really dig into and maybe find even a bigger edge in this setup, based on current day data. I
Mm.
mean, what you can do now with back testing and data digging is getting pretty
It's
deep.
almost getting like the easy button. It's kind of crazy.
Yeah, and the tools that are coming out now for back testing, and I mean, it. I still use Excel because I've been using Excel for forever, but some of this new stuff really expedites the process and has helped me, like Spiky, for example, helped me
Mhm.
with this setup right here. Actually, this setup probably wouldn't exist as quickly as it did if it wasn't for Spiky, because I could get so much data just
Yep.
snap of a finger.
Cool, cool. Well, look, man, I know people are like, okay, Alex, stop asking questions. I want to know what the strategy is. So go ahead and share your screen and let's get started.
Okay, I'm gonna show one here that I think is a nice clear example. I got different screenshots I use, and I know you and I have talked about this. I trade on DAS. Um, Most of my charting is done in Thinkorswim because I love them. And then I actually have some screenshots from, because I had to go back. I went back to find some examples in TraderSync out of my journal. So I got a different group. But okay, so this first one, I think this is just a real nice, clean example. Ignore some of the stuff that I'll talk about. The green line, irrelevant. The orange line, irrelevant. Purple line in this scenario is VWAP. For this particular setup, in my opinion, that is the only, and I don't run a lot of indicators to start off with. I just use a few, but VWAP on this particular setup, it's all you need as far as for how I'm trading it. So literally, can you see my mouse?
Yep, I can.
Okay. So all I'm looking for on this setup is this huge pre-market run, right? Which this was massive. This was a big move. So you're looking for these huge moves, and so I call this a gap and crap, right? How many
Yep.
times have we heard people with gap and crap strategies, and they're all different, right?
Right.
So for me, the gap and crap is literally a huge gap before open, and then it also craps out before open.
Mm.
So this is what I like to see: the huge pre-market push, fade before open, and opens weak in comparison to the pre-market move, right? It's
Okay.
still a gapper, hence why I'm looking for like a 30%, you know, actual gap at open. But ideally, from this pre-market high to the open, I am looking for a greater than 15% pullback. Okay.
Okay.
20 to 25% is even better, especially if the gap is still above 30. But that's where you're getting into real, like, more specific things or real acute things in back testing, A plus plus, that type of stuff. But at minimum, a 15% pullback from your pre market high to open. So that's why I call it a gap and crap, right? It has gapped,
Mm-hmm.
but then it's crapped out even before open. And then what I
Okay.
like to see, again, in the first, prefer it to be 30 minutes. I'm cool if it takes up until an hour, and the absolute cutoff for me, market time, is 11. Like after 11, for me, it's invalidated. The win rate goes down tremendously. And I'll add this too, before I get more in depth on this chart. And this by itself is not important, I guess, but is at the same time when you correlate everything. The win rate for me on this particular setup is just shy of 80%, which again could be great, could be bad. If you win 80% of the time, but your wins are 5% and your losses are 50%, the win rate is completely irrelevant. So that doesn't matter by itself. So when people talk strictly about win rate, it whatever. But 80% win rate, roughly. My average winner is just shy of 11%. My average loser is 4. So it's like an
That's
80%, yeah, almost an 80% win rate with a 2-to-1 risk reward. Now, the only downside, in my opinion, to the setup for me is it doesn't present itself every day, just to be honest. So for people watching, if you think it's going to show up every single day, it does not. Most weeks, this thing does present itself 2 or 3 times. Do I catch them all? Absolutely not. But it usually does present itself a few times a week. Some weeks are better than others. Some weeks it doesn't present itself at all, but it's not a daily setup. But when it's there, it's something that I try to really focus on because of the win rate, because of the risk reward that I get from it. So just wanted to throw that out.
Yeah, absolutely. I was going to ask that question, so go ahead.
So, like I said, the big pre-market push, the crap before open, and then of course the open. And what I'm looking for, and this is almost simple, stupid, which is how I prefer to keep it because I'm not that smart, but I prefer this push to happen, literally to VWAP and then a fail. But I'm looking for this push to happen. Like I said, ideally in the first half hour, first hour. After 11, I'm not even looking for it. But I'm looking for this push to happen. And usually I try to get my entry as close to VWAP as possible.
Into the push or after the push?
Usually into the push right around VWAP. But then from there, because of the back test in the system, I'm not entirely systematic, but I do love data to help me make some decisions, right? So usually once I get in around VWAP, I'm risking typically around 5-6%, looking for 10 to 12, right? That 2-1 risk reward. And it's not an exact set number, but I'm looking for this. Sometimes it hits VWAP and fails immediately. Those are picture perfect. They're not all picture perfect. We know that, right? Not everything's going to be a picture perfect setup. Sometimes they eclipse, breakthrough, VWAP, whatever. But I'm still looking for either a VWAP touch and fail or just a quick push above and fail. If there is any sort of consolidation above VWAP, that is a major red flag. If that thing starts to consolidate above VWAP and it's creeping on 11 o'clock, I'll usually just exit, maybe for a small win, small loss, whatever. This setup for me after 11, if you start messing with it, the win rate is just complete night and day from what it is pre-11. So it's just not even worth it at that point. And at that point, I'm looking for other setups in the day. So this thing, that's why I think this is good for new traders too, because some guys, like California, for example, pre-market's at what, 6:30? Or market opens at 6:30, right? My math, right?
Yeah, I think it's 6:30.
So you can trade the open for 2 hours and still make it to work on time.
Yep.
Like guys on the East Coast don't have that luxury. And of course, guys on the West Coast be like, oh, well, waking up at 6:30 is not a luxury either. I get it. Two sides of each coin.
I mean, it is if you're just getting started in the trading.
Yes. Yes. So I think that's why it's another reason it's great for new traders, because most new traders aren't full time and they shouldn't be, right? Yes. You should be doing something. So this setup is nice for that reason as well. And then two, to kind of keep yourself on a leash, what I've done in the past is sometimes I've gone ahead and set is my mouse there on VWAP?
Yep.
Okay. Sometimes I'll go ahead and set a limit order right around VWAP, right? Just to keep me honest. So I don't jump in early, because I've done that before. And then sure enough, what does it do? It's VWAP. And then I'm like, well, crap, then my entry sucks. And it kind of messes up my whole risk reward, all that stuff. Yep. So this is just a nice, clean example. And something I wish somebody would have told me a long time ago, right? Is I can give this setup to somebody with my exact criteria, the exact percentages I'm looking for, my exact stop, my exact everything. But that doesn't mean it's going to work for somebody. And I guess what I mean by that further is some people some of the best traders I know that make a ton of money, their win rate's like 30%.
Mm-hmm.
I don't have it in me to only win 30% of the time. So if somebody gave me a strategy like, hey, do this, you can make $1 million in a year. When it comes down to the psychological things and going through those periods of drawdown and loss after loss after loss, I just don't have that in me.
Yep.
So even though this setup is we're talking about it, and I'm typically risking, 5% above VWAP, 5-6%, and trying to get that 2-1. Some guys that trade this might go for a 1-to-1 just to get, risk 5% to make 5%, or risk 5% to make 6-7%, whatever, just to get some consistency.
Yep.
And then 2, I'm going to throw this out. Maybe I shouldn't. But the odds of these type moves that happen, right, these huge gaps, fail, VWAP, the odds of them breaking pre-market high is super low. I mean, incredibly low.
Oh, yeah.
So
The odds of it even reaching pre-market highs is very, very
right.
low.
So if you wanted to risk closer to pre-market high and have a much higher win rate, then one could do that. I don't do that, but I mean, that's where it comes into what you're comfortable with, right? Like, it's almost damn near 90% of the time these things don't eclipse pre-market high. Like, stupid low. Now, then we go through periods like the last couple of weeks where things just opened and kept going and going and going. So, that's where you can get into trouble. But that's just a nice, clean example. But another one I wanted to show here, and I want to show this one specifically because this was recent.
Okay.
Right? So some people...
SUGP, yep.
Yeah. So I've shown this to people. And most of my individual data tracking with this particular setup kind of stopped. Because I used to just track this thing relentlessly. I did Spikey, and then I tracked the performance every single day for like 2 years. I kind of cut that off the first quarter of 2023. As far as relentlessly tracking. Of course, any trade I make, I'm still journaling. But I kind of quit relentlessly tracking it. So some guys were like, oh, yeah, but you don't have recent data. Granted, but I'm still journaling all my trades and seeing the win rates and things like that. So yes, I'm not relentlessly tracking, but this setup still happens. And this is a perfect example. Like, this thing gapped huge. It had a massive retraction, drawback, whatever you want to call it, from the pre-market high to open. And then literally within the first 30 minutes, I mean, this is perfect. And did this halt? I feel like this.
Yeah, it did. It halted up and down. I went long on the halt up. Before it halted up, I sold some in that on halt and then cut it for break even pretty much whenever it halted back. It just immediately halted back down. It was crazy.
Yeah.
I was like, okay.
So this probably would have been tough to execute given the halt, but I mean, halt aside or whatever, this pattern still presents, and this is perfect. The huge gap, the retraction, the push to VWAP in that first half hour, and then, I mean, it just faded. My chart cuts off at like 11, but I don't know what it did the rest of the day, but it doesn't matter. For me, if I would have risked 5% above VWAP, and I'd have been well out before the whatever. That's another reason I like the setup too. For me personally, my profit taking with this setup usually also happens before 11 a.m. market time, which then lets me be done with this trade.
Yeah.
And either, I don't know, do whatever I want for the rest of the day or focus on other setups, because there's other midday setups that I like to trade. So usually this thing is done, traded, and booked pre 11 a.m., which is, again, if you're a new
it's
trader,
really great, especially if you're new.
Yes, I mean you're not only in the trade, but you're out of the trade pretty early on, ideally.
I do have a question. Yeah, go ahead.
No, I was just gonna say this was a recent thing, because I've had guys that I've tried to teach the setup ask me, "Oh, does it still happen?" Yes, it still happens.
Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you can just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show. So one of the questions that comes to mind is, you're really adamant about 11, right? Mm-hmm. So I know traders are going to be trying to trade something like this, and they're going to be like, oh, it's 10:55, like, or it's 10:59, like, or it's 11:01. Like, how do you gauge that? Because I know people are going to hear this and just going to be like, okay, well then, some people are going to be like black and white, and some people are going to be like, I don't know. So just curious.
So I guess I'll answer it too. If you're new, I would literally black and white cut off at 10:30. I wouldn't even fool with 11. If you're a little bit more seasoned and you understand how these things move, you've seen this pattern play out time and time again, you're a little more familiar with the tape and the volume and things of that nature, then yeah, I mean, if you dabble in around between 10:45 and 11:15, maybe you tighten your risk up a bit or you take a stab at it. It either works immediately or it doesn't. I could see I've done that. Yep. I've done it and I'll do it again.
Yep.
But the win rate does get it drops significantly after 10:30. After 11, it's even worse. So, but yeah, I've done it. I'll do it again. But if you're new, I would black and white cut it off at 10:30 market time. Give it an hour.
Now, do you have to get in at VWAP? Do you like scale in? Do you just curious on your thoughts on that end?
Yeah, so
prefer one and done.
See, I have a couple. These are a little bit harder to see. I love Trader Sync. I'll probably use them for forever. Most of my charts are 2 entries, 2 maybe 3. Very rare do I have 1 in, 1 out. If I have 1 in, 1 out, it's probably because I didn't get full size. I typically like 2, maybe 3 entries to get full size. And a lot of times I will usually 1 out if I am full size, if that works out too. But I guess this is an example, right? Like I hit it at open. That was a bit premature, right? I'm not an opening print trader per se. But this candle, which now kind of looks irrelevant, but this candle wicked up and immediately slammed back down. I'm like, oh, it's already done. So I went ahead and got in. Of course, it chops around, and then it got close to VWAP. And again, I didn't set limit orders on this like maybe I should have, because I would have gotten executed right at VWAP. But again, a couple in, and it just never even pushed above VWAP, and then it kind of trails down, and I finally took my exit. But I am usually 2 in. I don't think it's a bad thing, especially for new people, to maybe set that limit order at VWAP. Mm-hmm. And you can, there's all sorts of things you can do with Dosh. You can do OCO orders, you can do limit orders, you can do all sorts of things. So you can pre-plan everything, right? You can set your limit to get in, you can set your exits. I mean, you can do everything ahead of time to keep yourself honest. And sometimes with this setup, I still will limit at VWAP. And then, you have audible notifications that an order went through and all that type of stuff. But yeah, typically I am 2 in for the most part.
Do you consider any levels at all with this strategy? Like if there's like a key, like maybe in this, let's just say, for example, there's like a key breakout area and it's holding the breakout, even though it faded and it's everything hit your criteria, everything. But on the daily, it's like clear as day, like it's a breakout, and it still fits your criteria intraday though. Do you consider that? Like, does that an avoid? Is that like, how do you consider that?
No, absolutely. So I think that's where things start to evolve, right? When you get beyond somewhat of and I know there's some guys that remain solely systematic, and that's completely fine. I'm not solely systematic. So where somewhat of an evolution comes in, or yeah. So I do have guidelines on this setup, right? And one that I have typed out here is clear pivots on the daily chart. All right, like if I can see clear levels on the daily chart, either in a form of support or resistance, I will absolutely take that into account.
Okay.
Especially entries. So this is a good example. I don't have the daily chart on this. I wish I did. But in my journaling notes on this trade, where I entered again at open off this wick and then added at VWAP, there was a nice daily level just above this. Like it was right in here where this daily level was. So at pre-market, it was holding above it. I'm like,
Yep.
okay, it's a little sketchy. But then before open, it faded. And then
Mm-hmm.
above it is a pretty big daily level with a lot of volume. So I'm like, all right, it's got resistance on a daily chart, right? Which is, for me, on almost everything I trade, I consider like the most important thing, right? Like the daily chart for me is at the top.
Yep.
So big daily level plus VWAP is right in that area. Plus the criteria fits,
Right.
right? So like all of that together, yeah. I mean, this is like an opportunity. Like, yes, I might be wrong, and that's fine. But I mean, I gotta take the trade, and if I'm wrong,
Mm-hmm.
I'm wrong. And of course, I got out on this flush maybe a little prematurely, but I think if I remember right, this was also a pretty low floater. I don't like to overstay on low floaters for too long.
Can you tell
Um,
people why?
yeah. So
Because there's a lot of new traders out there.
yeah. So if you have even watched the markets in the last couple weeks, uh, it's a very prime example. But a lot of these low floaters make wild moves. So, for example, where I covered out, it's not been totally off the table for low floaters to just rip to pre-market high, halt, go higher, and then you get stuck in halt. Like low floaters can make ridiculous moves very fast, either direction. And actually, a friend of mine on, I think it was, I can't remember what day it was. OCEA is the ticker. You
Oh
may
yeah, yeah.
remember
That
that.
was like this past week, I think.
Yeah, it
I
was just
think
last
it
week.
was. Yeah.
He got stuck in that halt.
Mm.
So it skipped his stop, and then he lost an additional like 20%. And it was, I think that was a low floater. And that's the type of stuff with low floaters that I don't care what your stop is. If it halts and skips your stop, sorry.
Yep. You'll get
And
stopped out there.
yeah, yeah. And that's just much more common for low floaters. Like, so when I first started trading, I didn't trade anything sub 5 mil as far as 5 mil float,
Okay.
right? Until I got more comfortable, more data, more reps. Then it lowered to 4, then 3, then 2. Now I'll even trade sub mil. Um, Not saying everybody should do that. I will do
Yeah.
it on
I'll do it
certain,
too, but like, yeah.
yeah, certain setups. You know, I mean, to be fair, they
Hey,
can
you
go
better
down as
risk
fast as they.
wide.
Yes,
Risk wide. That's the
yes,
biggest tip I can give.
and yeah, absolutely, you're not wrong. And that's something people don't talk about either when it comes to risk. Like how you manage your stop and position size is so key in any given
Yes.
setup.
Mm-hmm.
Like just because you have a 30% stop doesn't mean you're going to take a massive loss if you position size accordingly. Like position sizing is something that's really not talked about a lot, but it is so key. And on this particular setup, because I'm not risking much, usually 5-10%, at most 10%, typically somewhere in between there. I can go a little bit heavier on size because I'm risking a relatively small amount versus something like a 30% stop, which I don't have. But anyway, yeah, but you're absolutely right.
I'm curious on because I know some new traders. We have a lot of new people watching too, and they're probably thinking like, how much do I need to even start trading this strategy? Like, do I need a lot of money? Like, what would you recommend me to do, Craig? Because I really want to try this. Like, just getting started. Do I need a lot of money? What would you say to them?
Good question that I probably haven't talked to newer traders about that I've even tried to show this to. So if you're in America, right, we have the PDT rule, which is horrible. I hate it. I hated it. I still hate it. I don't even have to fool with it anymore, and I still hate it. But, um, and I touched on this early on in this episode, right? This setup, and this is another perfect, like, prime example, right?
Yeah.
Um, it doesn't present itself daily, right? Maybe a few times a week. So if you're getting into trading and you're literally just trying to trade this setup to get
Mm.
started, right? You might take a few trades a week. So if you open a Trade Zero, um, I'm trying to think of other broker, Venom, Cobra has their
Yep.
Venom thing. I know there's other hard to borrow
I
brokers out
think
there that you can.
interactive also. I think. No, wait.
Yes,
Is interactive under 25?
I don't know.
I don't even
I
know.
I don't either. But I know there's some hard to borrow brokers out there that allow you to trade without being above PDT.
Hmm.
And that sounds like it would be a hindrance, and I'm not gonna whatever. Whatever. Anyway, if you're under PDT, this is a good setup to trade because it doesn't present itself every day. So if you only have, because under PDT you get what 3 day trades in a
Yep.
5 day period. So 3 times in a 5 day period, like
This is a great
that.
strategy.
Yeah, this is probably on average. I would say maybe this does show itself 3 to 5 times a week, maybe. Some weeks not even that. So yeah, this is for somebody under PDT. If you have a $2,000 Trade Zero account, this is fine because, and I don't want to go too far into position sizing and things like that, but I will say when I trade on a smaller account, a lot of times I would, and I don't recommend this on bigger accounts. Smaller accounts, oftentimes I would go all in, right? I would put 2,000, the whole account onto a trade, but keep my risk tight, right? Like you got to respect
Yeah.
your risk if you're going to do that. But the only way to really grow that small account, I think, is to go heavier with your account.
Yeah.
When you have a bigger account, I think all that goes out the window and you need to seriously adjust some things. But with a smaller account, yeah, I think this is fine. And again, when it comes to small caps, I think this is a relatively lower risk strategy. I guarantee you, I'd have to go in my journal and look. Well, I don't even notate that. But I guarantee you, this particular ticker, two things. It wasn't the hot chick, and there was probably plenty of locates because it wasn't the hot chick. And they were probably
Mm.
cheap. So that's another thing too, and that's something I have in my like on the strategy part of this is the locates for this setup are usually very accessible and much cheaper than they are on
The hot chick.
the hot chick. Yeah, like especially if it's a low float hot chick, like those locates can
Everyone wants to holler at them. That's why.
yeah,
That's what.
man. And them locates can eat you up, but on this particular setup, the locates
That's
are
a really good point, man.
yeah, they're much cheaper. They're much more readily available because most people, longs, shorts, whatever, aren't really looking at this. Because a lot of times on my gapper scans, right, it's sorted by the highest gapper, of course, right. This ticker right here was probably like 6, 7, 8 on the gapper list. People aren't looking at that, but this was like a gimme. I mean, this thing hit VWAP. Yeah, it flirted above it for about what 5 minutes, maybe there, not even, and then it slammed back down. Like
This is a good chart because I know people are going to run into this, right? You see how it hit VWAP, failed. So like, you're going to have some traders who are more antsy or don't want to lose, right?
Yep.
And they're going to adjust their stop right away. I know he said 5%, 6% or something like that. And obviously you guys want to do your own research and do your own kind of stop. But like at the end of the day, you're going to have some people get stopped out on that retest. So what is, any tips? Does this happen often? Do they need to expect something like this?
Yeah, in my opinion, yes. I can find more charts that look like this than I can find charts that perfectly touch VWAP and slam right back down.
Okay.
Like, yes, I have some like that. I don't even think I put in the presentation like that because it's just not realistic, right? Like, yes, it happens, and they're beautiful when it happens, and you're gonna love life. They don't always work out like that, and they typically don't work out like that. So when you get in, right? Let's just say you are disciplined and you get right in at VWAP. At that point, whatever you like you said, you got to kind of research and figure out what you're comfortable with for stops and targets and maybe your risk levels and things like that. But if you're going to do, risk 5% to make 10, go ahead and put that in. Because then when it chops around VWAP a little bit, like it does right in here,
Right.
you're not getting faked out. Because yeah, it hit VWAP and it did fail a little bit.
Right.
But it did retest, and then the major fail happens. So yeah, you could have covered for maybe a few percent or maybe taken a loss for a few percent, but if you would have just respected your risk reward levels, you would have made 10+%. I mean, some of these setups, and again, I gave out some generic levels at the beginning, but some of these, if the gap is high enough, right? If the gap is high enough, if the retract drawdown, whatever's significant enough and the gap is still, let me back up.
Basically,
So
what you're trying to say, if I understand correctly, I think I got you. Like if it gaps high enough, fades the percentage that you want, but still is opening like massive.
Yeah, like 50,
you might
60, 70%. Yeah. So yes, 100%. Like in those scenarios, like I might risk 5, 6, 7, maybe even 10% if the range is there. If it has enough range, right? I might risk 10% to make 30.
Yep.
And that's just where repetition on this setup comes into play.
That's the art.
Yes, the pattern recognition. Because if the range is there, if this thing has a massive pre-market move, is still gapping or opening up 50, 60% or more, then maybe on that VWAP push, I'm going to risk 10% to make 30. Yes. I mean, so sometime, and that's so I rate my setups. I know some guys don't rate setups. Um, but there are some times that these setups are it's okay, right? I'll risk the 5 to make 10. The range isn't great. It's a 30% gap. It's only a, at minimum a 15%, fall from here to open or whatever, and it's not that great. So I'll just risk 5 to make 10 ideally. But yeah, sometimes the range is so massive and it's still a 60, 70% gap. I'll risk 10 to make 30 because the range. Like you
It
have
makes
to.
sense. And on the previous couple of examples you showed, it just so happens that you're covering near that yellow line. Is that any significance at all to you?
So, and the reason I cut some of this stuff out is because I don't do this anymore. I used to cover the blue line's VWAP, right? And then this green and orangish one, they were EMAs. I still do use EMAs, but at some points I was or I would even take profits at a certain EMA level. I have kind of stopped doing that. I've become more focused on the risk to reward. So
Hmm.
if I'm risking 5 to make 10 or risking 10 to make 30, I'll go ahead and put those in and kind of ignore the EMAs because I just found no significant correlation with
Okay.
profit taking at EMAs.
So before we start to wrap this up, Craig, I had two more questions. One of them is, what would you say? Because I know you've helped some new traders, and you have your own Discord, which we'll talk about near the end, so people can find out more about you. But what have you found has been the biggest mistake that new traders make when trying this strategy out?
So I think you said it perfectly, right? It's getting antsy at this level
Okay.
and it's being okay with losing. Because if you did get that perfect entry at VWAP, right? And it goes down and you hold because it wasn't at your target, but then it goes above your entry and your
Hmm.
P&L's red, right? You're watching your P&L. You know you're losing money and you get freaked out and you exit, right? So when it comes to things like the win rate that we talked about, the average winner, the average loser, those stats are only valid if
Mm.
you stick to that. If you and I used to do this too when I first, especially with small caps because of the volatility. If I was red, um, I would want to cover well before my stop, and then if I ever got green, I'd be like, "Oh, I'm in profit. Let me go ahead and exit.
Yep.
Doesn't feel right. Doesn't look right. Whatever. I just want my profit." And then 5 minutes later, it's down another 10%, right? Down from my short another 10%. So so yeah, with this strategy in particular, in these moves happen ideally pretty quick. Any consolidation above VWAP, I'm not really interested. Any consolidation around VWAP for longer than 10, 15 minutes, I'm not interested. I want this move to happen fairly quickly. But fairly quickly is also relative, right? 5 minutes in trading time when you're in a position and you're anxious can feel like an hour.
It can.
So like it can be tough. So you have to be patient, especially if you get a good entry. If you're patient for your entry at VWAP, like damn it, man, you better be patient for your exit. Like, and I think that in my experiences, and I think for most new traders, I think being patient for an entry comes easier than being patient for the exit.
Yes, I agree.
It's hard to do. You start seeing your P&L go red, and I know people talk about, "Oh, take your P&L off the screen." While I agree with that, it doesn't negate the fact that if you know what your position sizing is, you know what your account is, you have a pretty good idea of what your P&L is looking like, even if it's off the screen.
Yeah.
So, yeah, man, you got to be patient for your exit. I think being patient for the entry is the easy part on the setup because you're just waiting for that VWAP push in that first hour. That's the easy part.
Yeah, it is.
The hard part is the second half of that, like the exit. And I think that's why for new traders, even myself, sometimes I could be better disciplined in this. Once I'm in, just set that whatever you want to use in DOS, whether it's an OCO or your range or whatever you want to do, set that and forget it. And then, if it's 11 o'clock and either one's triggered, okay, then maybe take a look at it. Is it consolidating above VWAP? Are you in the profit, 8-9%? If I am, I'm gonna be done with it because after 11 o'clock, it gets into midday chop, and I don't even want to fool with it at that point. That's
That's a
just
really
me.
good point you just point out, and we'll end it on that. As you said, because I was going to ask you what your biggest tip is when doing this, but I think you've nailed so many like good advice on that. So you said just now though, if you're in the trade and it hits 11, is that your cutoff as well for the trade in terms of profit taking? Like, what's your guidance on that?
Yeah, so that's where it can get a little bit of a gray area, right? If you've entered in, let's say you've entered in at 10:30, even 9:30, whatever. I don't know. You entered in, it's pushing 11 o'clock, and you haven't hit your target or your stop. For me, my guidance is going to be if it's consolidating above V, especially above VWAP, even if I'm going to be in the red, which it shouldn't be much. I'm usually not
Right.
risking more than 5-10%. Even if I'm in the red, I'm probably going to go ahead and cut it if it's consolidating above VWAP. If it's consolidating or even around VWAP, I'm probably going to be likely to just cut it and be done with it. If it's consolidating below VWAP, right? Like, let's say it was consolidating around this
Yeah.
green line, right? And it's pushing 11 o'clock. At that point, what I'm going to do is I'm going to lower my stop. Maybe I'm not going to give it much, maybe 2% above where it's currently at, and then set my target. But I'm just going to lower the stop. And that's just me.
Yep.
So I personally don't think there's anything wrong with that, because then it's still keeping you in the money. You're lowering your risk, and or some guys will set trails. That's fine too. I think that's a little more setting trails
I
in
think
DOS
trails can
is,
really, I don't know. I haven't really met, I don't know. I have a
yeah.
mixed opinion on trails. I don't know.
I think
I
they're,
like trails with structure. I don't like
yeah,
trails with just like percentage. That's just me.
right. No, that makes sense. I don't think I would rather somebody lower their stop. I guess lower your range, right? You're lowering your stop and keeping your target the same than setting a trail. That's what I would do personally, especially if it's consolidating. Like I said, right around this green line or something is pushing 11 o'clock. Lower your stop, keep the range. You're done.
And one thing I want to note, Craig, and then I want you to explain where people can learn more about you, because I know people are gonna have a lot of questions. Craig is sharing his experiences and his strategy and what he has traded over and over and over and over again. So it's simple for him. Everyone
Yes.
who's listening, you got to test, you got to try, you got to do paper, you got to do small money or no money and just watch and build that library in your brain so you can build confidence. Otherwise, you're going to just bleed out. It doesn't matter how good the strategy is, as he said earlier. So just make sure that you take these lessons that he's given you, and you can also take what he's talking about and implement it into your own strategy, because he hit some great things like how to enter, where you're going to enter, make sure you hold to your stop. The reason that's important, as you mentioned, Craig, is because your stats don't matter if you don't actually stick to the actual plan, because then the
Right.
stats are irrelevant and then you don't have consistency.
Yep.
So Craig, if people have more questions, they want to find out more about you, how can they, man?
So the easiest way is Twitter, right? At Tatted Trader Guy on Twitter. I, me and Sellers, you've had him on the show before. We do run a Discord. We try to. So I mean, it's not paid, right? Like it's just a Discord with other traders. So we try to help as many people as we can. And we will answer any questions people have. But we do have a Discord. It is an invite only. But if you hit us up on Twitter, doors are open. But we just that way, just not anybody can come and go or
If you're a
whatever.
Be the Trader fan, you're in. You know what I'm saying?
Oh, absolutely, absolutely. But yeah, the easiest way, and his is at short sellers on Twitter. I think there's an underscore between short and sellers, if I remember right. But mine is at Tatted Trader Guy. No spaces, no underscores, anything like that. And then yeah, man, we'll help you out
You have a
however we can.
YouTube too, though.
We do, yes. Sorry. So see, I'm so bad at promoting. I'm bad at promoting myself. I'm bad about talking about myself. I'm good with talking strategy. I think maybe a little bit, but like the promotion part, oh, it's so bad. But yes,
Unfiltered.
Trading Unfiltered. It is on YouTube. I think we've talked about this on Trading Unfiltered. Like one of the first videos I think we did was a nice beginner friendly setup. And this is what we actually, some of these screenshots I think I'm showing now, we showed in that video.
I recommend everyone go check them out, because I actually watch Trading Unfiltered, and it's something that you want to see, especially if you're a new trader. Like I wish I had that when I came in. So thank you guys for doing that. I mean, you guys really just dive into your week and how things have been going, and I think it's just cool to see. So I appreciate you guys creating content like
No,
that.
I appreciate that, man. We're just two regular guys that we ain't multimillionaires yet. Maybe we'll be one day. But we both have wife, kids, family, whatever. So when it comes to trading and supporting our families via trading, we're very keen and adamant with risk management, because I ain't going to my wife and saying, "Hey, honey, I just blew my camp, can't pay the mortgage. Sorry."
Right. Yeah, yeah.
You know?
That's a
Like,
good
can't do
point.
that.
Because you
Yeah.
see the young guys who are coming in out of school and they're just risking massive. But when
Yes.
you're older and you have a family, you got to trade different. Everyone's in their own lane. So,
Yep.
look, Craig, I appreciate you so much, man, coming in and sharing the strategy. I know a lot of people are going to get a lot of reward from watching this. So again, thanks again, brother, and I'll bring you
Absolutely.
back, I'm sure, sometime.